Good morning, everyone. Thanks for joining on this call. We thank Hero Motocorp management for giving us the opportunity to host the call today. We have the senior management team from the company. I will now hand the conference over to Umang Khurana, Head Investor Relations, Hero Motocorp. Thank you, and over to you, Umang.
Thank you, Amit. Thank you, Aisha. Hello and welcome everyone to the Qtr3 post-results earnings call. On the call with us today, we have our CFO, Niranjan Gupta, and our Head of Sales and After Sales, Naveen Chauhan. We will begin with opening remarks from Niranjan and then open the floor for your questions. Over to you, Niranjan.
Thanks, Umang. Hi, welcome to everyone on our earnings call today. Good morning, good afternoon, and evening, depending on which part of the globe you are attending from. I hope all of you continue to stay safe and healthy. As you have seen, Qtr3 has been a historic quarter for us in many ways. Despite all odds, we delivered the highest daily production, highest monthly production, highest Qtr3 volume sales, and highest ever quarterly revenue. And we continue to have market share gains. Market share gains not only in domestic, where we continue to expand our leadership based on strong portfolio, gaining by 190 basis points, but also in global business, gaining by 90 bits in the quarter. It has resulted in robust increase in revenue, EBITDA, and PAT, which you have seen, outlining our consistent principle of profitable growth. While we have propelled into a V-shaped recovery, we continue to maintain all precautions across our operations with respect to COVID-19, and happy to report that we've reached a level of 0 active cases across Hero. The only thing which probably stands on a higher priority for us over profitable growth is health, safety, and care for people and planet. You've already seen that Hero is the only two-wheeler company in India to be included in Dow Jones Sustainability Index for emerging markets. The outlook for global economy and Indian economy is strongly positive, as outlined by both IMF and today by RBI, forecasting double-digit GDP growth for fiscal year 22 for India. The Union Budget and RBI policies are geared towards propelling underlying growth without giving in to compulsion of short-term stimulus. We have stayed positive throughout the pandemic crisis, and our belief getting translated into results, and continue to stay optimistic about medium-term growth potential of both India as well as auto sector. We look now forward to your questions as well as inputs, and let me now open the floor for interaction.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity. 2 questions from my side. Could you talk a little bit about your ASP expansion? What were the drivers for that in this quarter? We see ASPs up around 2.5% quarter on quarter. Within that, could you share your spares number in the September quarter and December quarter? Secondly, one of your peers has talked about almost 300 basis points of pressure on the commodity side. How would you see those pressures? How much of it is already there in December quarter, and what kind of headwind are you expecting in the March quarter, and how are you looking to offset that? These 2 questions from my side. Thank you so much.
Thanks, Binay, for asking that question. On the selling price, it's a combination of 2-3 things. One is the price increase that we took from 1st of October. The second is our mix is also improving more towards premium, which again is improving the underlying health of our portfolio. And the third is the parts, which you yourself have asked the question, where we grew by 29%, where last year was 800 crores, and we had in quarter 2 as well similar numbers of 800 crores. And this quarter, which is quarter 3, we've delivered 1,033 crores, that's 29% growth. Before I come to commodities, let me just ask our head of sales and after sales, Naveen, to talk a bit more about the parts, because there's an underlying change that has happened in the way we sell parts. Naveen, would you like to add more color to the parts growth and what we are doing and the future potential?
Sure. Niranjan and hi Vinay, and good morning, good afternoon and good evening to everyone who's on the call. There is a fundamental shift that we've initiated around a year and a half ago, primarily on the distribution side. And as you say that, learn from cross industries, we've looked at, what's being done in FMCG and other businesses, the kind of distribution that they do, going very, very deep into the market. So, we've looked at what's the kind of distance, time, frequency at which things are delivered to the customers, to the retailers, to the SP heroes, technicians. I think there is a sea change in the way we've done. We've gone very deep at every district levels. Our number of retailers that we cater to is almost up by 50% if I look at our number of independent technicians that we directly deal in. There is a HGP on wheels, is a new concept wherein we are delivering parts to technicians on a two-wheeler. So all in all, a huge push in terms of going very, very deep with range into the market. And add to that, another portfolio in our part business, which is what building up, is the accessories business. It's the initiative again a year and a half ago that we kind of put on track. It's showing results, and our plans are very huge on that space as well. Thank you.
Thanks, Naveen. Let me just come to the commodity part of it. Vinay, commodity escalation is nothing new. We have seen commodity cycles operating in ups and downs, and because of our portfolio, our supply chain, our scale, our ability to dial up, dial down the costs, we've been able to navigate the space of commodity very well, as you would have seen in the last few quarters or the last few years. And therefore, we are confident of navigating this. And as we have mentioned, we will continue to focus on a balance of judicious price increases. We have taken price increase up. Industry across have taken from 1st of January. But we continue to focus aggressively on cost savings. By the way, our Lead to Savings program, which we had outlined 3 quarters back, if I remember, that we embarked on, has started resulting in significant savings. This quarter, we've generated more than 100 basis points out of LEAP 2 alone, which is more than twice what LEAP 1 was generating. And we see sustainability of these savings moving forward in the next few quarters because they are on the back of very robust projects which we had outlined in combination across the supply chain.
Thanks a lot. I'll come back in the queue. Thanks for the detailed response.
Thank you. The next question is from the line of Karthik Chellappa from Buena Vista Fund Management. Please go ahead.
Yeah, thank you very much for the opportunity, sir. I have 2 questions. The first one is the 125cc motorcycles, where we have seen some sharp gains by Bajaj through their new Pulsar, which is growing off a very small base. But what I notice is among the mainstream brands in the 125cc segments, it's actually Glamour which has been down the most year on year. If I were to compare it even to Splendor and Shine, etc. In your assessment, what would you attribute this reason to? And what are some of the initiatives that you're taking to arrest the share loss in the 125cc bike segment?
Thanks, Karthik, for the question. Let me start, and then I'll hand it over to our expert, Naveen, on this. Let's just take a recap back. Overall domestic, we've gained market share of 190 basis points in the quarter. In the deluxe segment as well, we have gained the share. So sometimes there is a shift that happens, and between 125cc and the 110cc deluxe, our margin profiles are not very different. So from a portfolio perspective, we've gained share across the segments as well as overall domestic, and we continue to do that. Having said that, yes, there are certain things on Glamour which we have noticed, and there are actions, but let me just hand it over to Naveen for more expert comments.
Yeah, sure. I think it's the same story, right? There is so much of shifts. In fact, just go a little back in Q4 of last year when the BS6 was coming up. whole corona impact kind of, it actually shook the consumers, the income levels, the industry, and the combination of the two, the price increases on account of BS6 and industry impacted by COVID, had a lot of shake-up in the industry. Customers moved from one brand to another. Within the brands you see our Splendor portfolio, the contribution is going up significantly. Within brands we've seen, and it's true about some of the competition also, the brands that you're referring to, you would find there's a huge shift which is coming down. And if we look at the consumer profile as well in the 125cc segment, earlier it used to be someone who wanted to have a little bit more power, more of commuterish. Those are the kind of customer segment that we were looking at. Now it's the premium guy who's kind of coming a little down and opting for a style segment in 125cc. We've got our new products, fresh products in BS6 regime with Passion Pro coming into the same segment, attracting those style segment, as Niranjan said. Overall, as a deluxe portfolio, we've done good. So we are getting that customer at Passion Pro. The Glamour, particularly the product that you talked about, it also came into a new avatar. Interestingly, we've been gaining market share across the country except for some of the core market, which are AP, Telangana and East. We have noted that, and there are steps. And in fact, one thing that we've done as an organization great is the agility to respond to the market needs. And that's been our mantra. We'll go with the same mantra and come up with the right solutions there.
Got it. That's great. My second question is, could you share the share of financing this quarter for Hero? And within that, what percentage would be accounted for by FinCorp? And has the mix of your financials by and large changed either year-on-year or quarter-on-quarter?
So the finance penetration, and when you look at the actual final customer sales, is a percentage of close to around 50%. Although typically Q3 is, because of festives, also somewhat elevated levels, but it's progressing in the right direction. And the FinCorp as a percentage is close to around 40%. We've been enrolling more financiers into our bouquet of financing so that we can have more customized products in the pockets where different financiers are strong.
Okay, so it looks like the share of FinCorp has actually come down at the margin.
Yeah, you could also say that overall it's not come down on absolute, but just the expansion of the penetration. So there are always two ways to look at this topic, and then every company has to optimize based on their own appetite for the customized product.
Okay, this is great. That's all from my side. Wish you and the team all the very best. Thank you very much.
Thanks, Karthik.
Thank you. The next question is from the line of Gunjan Prithyani from JP Morgan. Please go ahead.
Yeah, hi. Thanks, team, for taking my questions. Two questions from my side. Firstly, on the financials, when I look at this consolidated P&L, there is a loss of about 100 crores that I see from the associates. Could you just give some color on what is this loss coming from, and if you can share a little bit more color on what's happening with the Hero FinCorp financials or asset quality, please?
Thanks, Gunjan. Yes, you rightly noticed, and that's because of two reasons. One is, as Qtr has launched into more cities and into new product now, post their capital raise, obviously initial period there will be a cash burn which will get a higher rate as they expand into more cities, and that's what reflected as part of that. The other part is post the moratorium period getting over, obviously the entire NBFCs and the financial sectors are adjusting their provisioning and the NPAs, and therefore you see that impact from FinCorp in the quarter. Their collections continue to be robust. They continue to pick up in terms of the continued collections that are coming in, and they are seeing buoyancy in the business growth moving forward from here on.
Is there any color further you can share on the numbers of FinCorp in terms of, the gross NPA or, earnings, if anything is handy, because, or the breakup of this loss, because I'm just trying to understand, is this something that we should be thinking from a modeling perspective, that there is going to be a similar drag when I look at, F22 as well?
So don't expect a similar drag at all, but Umang will offline connect with you, and then he'll try to provide more color on this. This is a reset or readjustment which most of the NBFC companies have done in Q3 post the moratorium period getting lifted.
Okay, got it. The second question I had was on the market. If you can share some color on how the retail demand has been, particularly post the festive, because there has been a lot of concern in the market that, the two-wheeler demand is still looking a bit softer. So if you can talk about it and, also you share your thoughts on this Vahan trend, because we continue to still see low-teen decline there. So, both of this put together, it will be good to have your thoughts on how we are seeing the market.
So, Gunjan, let me address the Vahan thing first, right? So it's consistently Vahan is lower, and that's because of the coverage and obviously some of the data collection and the lead and lag impact. But surely over a consistent period, if our sales are higher and higher and higher, somewhere those two-wheelers are going, and I can assure you they are going to the customers and they are riding on it. So I think that's what I would say as far as Vahan is concerned. As far as demand is concerned, we've seen a good demand on the festive, which has happened. And now the forecast as far as the economic outlook is concerned, that is positive. Double-digit growth by IMF. RBI today has talked about, if I remember, 10.5%. We are talking about crop, which is again a growth over last year. Rabi crop, which is there. We are talking about the water reservoirs, which are at a high level. GST collections are at an all-time high. So honestly speaking, all the indicators which would in effect boost demand overall and for rural and especially for auto are all in place. So there is no reason to doubt that demand will suffer moving forward. Of course, there can always be a couple of months here and there where somebody is off to slow start, some marriage dates which can shift from A quarter to B quarter. So those kind of things can happen. But underlying medium-term demand, if you see, we have no reasons to doubt the robustness of the demand. And plus, if you see the vaccine and the sentiment, people more going out, we see more sectors opening up. I mean, as of 1st February now, theaters have been allowed to operate at 100% capacity. Now, one would cue that what has that got to do with demand? But yes, more and more sector opens up, the consumer confidence boosts up, and of course, on top of that, the union budget, which is focusing on significant increase in capital expenditure infra projects that will generate, hopefully, employment, and it's the right budget to generate, again, propel the medium-term growth. And RBI is keeping the soft interest rate regime, as we saw in the policy today. So all the macros are in place, including macros and micros. So there's no reason to doubt that if in the worst affected period, if the demand has been good and the results have been what you've seen, that in the period when the economy is recovering, it should be any different. If it should be any different, it should only be more positive trajectory.
No, absolutely. The results have been great, but I was just trying to understand that you mentioned there was a positive growth in retails and festive that we came out with the release. Is that trend kind of held on post the festive also, that retails have been stable is broadly what I was trying to understand, or has there been any moderation?
Short periods are too short to actually look at.
Sure.
January, for instance, first fortnight was not an auspicious period. All of us know that. So I think let the things pan out in February, March. As we see, fundamental drivers, we don't see anything different. If at all, they are moving in the right direction.
Okay, got it. If just one question I can squeeze in on the margin side, you mentioned there are levers around cost and levers around price increases. So we are sticking with that range of about, I think, 14 to 15% EBITDA margin that we had shared. Is that something we can manage, when I look at next F22? With the levers that we have of cost and cost and price increases.
So as you know, we refrain from giving a quarter or a particular year's guidance. But yes, as far as medium-term range is concerned, the tram line that guides us on our decision making is 14 to not 15, it's 14 to 16%, which is what we've reiterated always. And you've seen how fast we've come back to those levels after the initial drops. So that keeps guiding us on balancing between market share growth and margin so that we can deliver profitable growth.
All right. Super helpful. Thank you so much.
Thank you.
Thanks.
The next question is from the line of Siddharth Vora from Reliance Nippon Life Insurance. Please go ahead.
Yeah, thanks for taking my question. Can you hear me clearly?
Yeah. Go ahead.
Yep. So I agree, Niranjan, to your the broader demand trends which you pointed out, I was a bit confused looking at the volume numbers for December and January. Is it a case of production issues, or you trying to reduce inventory levels for better price hikes in the current RM cost scenario? How should we look at it?
I think, Siddharth, I would only suggest that we should never look at, in our viewpoint, at least we don't look at, few weeks and 1 month or plus or minus, right? So we should look at a quarter in totality, and the Q3 you have seen in totality what the numbers are. There is no conscious action to change, dispatch numbers or inventory numbers. As it plays out, as the quarter picks up, again the thing will pick up back again. As you said, what is more important is, are the drivers intact? Are the drivers getting better on macro basis? Yes or no? And there we see the drivers getting better on macro basis. Interim periods, a few weeks, a month here and there, there'll always be those pluses, minuses that happen on a demand basis. That's not reflecting underlying medium or a long-term demand pattern.
Sure. And there is no supply chain issues relating to semiconductor or anything, right?
So semiconductor is impacting globally the auto industry, but we've managed it well, and it's in control. As far as we are concerned, our products are less dependent on semiconductors. I think, though I'm not an expert of four-wheelers, but what I understand is four-wheeler sector is more dependent on the semiconductors. The supplies are picking up, but through our storage, our stocks, or the back end, we are managing it well. So we haven't faced any production losses so far on account of semiconductors.
Sure. Just one question. I was happy to see a lot of anniversary editions across the product range which we saw during this festive season. So it is just to catch in terms of the festive season premium demand, trying to improve the overall realization, or you will see such models going on sales for the entire year? How do you look at it?
So let me start and then I'll hand it over to Naveen on this one. We will, first of all, as we have outlined 2-3 weeks back as well, is we will continue to have new model launches as well as refreshers going forward every year. And this is not something new, but this is something that we had outlined even a couple of years back, and you've seen that. Alongside, within these new models, you will see a focus on premium, which again we had outlined, that you will continue to see over the next 3 to 5 years, us actually spanning across the entire middleweight segment and across the different classes like adventure, commuter, sport, etc., etc. So within that, that's what was outlined, that 10 or more than 10 models, including refreshers, will be there every year. As far as the current one is concerned, as you know, we crossed the historic milestone of 100 million cumulative production. Now that's a big milestone, not just as a historic total, but it also indicates the huge customer base that we have and the potential this customer base has for revenue and for monetization moving forward. So on that occasion, these are the occasions that you leverage to then launch the variants and editions, which then propel and rejuvenate the market. Naveen, would you like to add something color on that?
And in fact, our experience with these, the variants that we've created, the refreshers that we've created, it has worked wonderfully well for us. In festive, we had launched Blaze and Canvas model, which is based on the crowdsourcing idea. It has done wonderfully well. It continues to do good. Pleasure Platinum has been able to expand the Pleasure brand across the geographies. So the strategy that we have taken in terms of coming up with refreshers is working well, and we continue to kind of move ahead on that.
Yeah, so these refreshers are available all throughout the, it's not that only in the festive season for that 1 month and they are no longer available. Just to correct that.
If you're talking about 100 million, it's going to be limited edition, right? It's a celebration model. However, there are a few refreshers that we're talking about. They are there on the sustainable basis. For example, the Splendor Canvas edition, which will continue to be there. It is exciting the market. You would see more of it. Pleasure Platinum will be there. It's a new variant. So that's what it is.
Sure. That's it from my side. Thank you so much.
Thanks, Siddharth.
Thank you. The next question is from the line of Raghunandan NL from Emkay Global Financial Services. Please go ahead.
Thank you, sir, for the opportunity. Congratulations on strong numbers. First question is on student demand. Student demand as a category used to contribute 10-15% of volumes in normal years. This segment has been weak in recent quarters. How do you see the recovery panning out in this segment? Any thoughts there?
So, Raghu, absolutely right. As we talked about, there are not only macros but micro factors, and some of the factors which will come alive. And something that we missed talking about is what you have picked up, which is the student demand. As the colleges and schools start opening up, as you have seen in certain states which have already been announced, I think Maharashtra, Delhi, and some other states have announced, as they start opening up, that part of demand also will come back. Naveen, would you like to?
And we are seeing that in more urban centers opening up, more school and colleges opening up. This demand, which used to come normally in the month of June, July, it's kind of manifesting now.
And it should gain momentum going forward. I mean, just to get a sense, how weak is this portion of business, in the last quarter or year to date, and when do you see the normalization happening?
So this has started picking up. We know that due to lockdown of colleges and all, which used to come in the month of July and all, as I said, was not there. The pent-up of that is going to come now. And as state by state colleges are opening up, this will manifest.
Thank you. My second question was on premiumization is being seen in the industry, and Hero has done well so far in terms of market share. Assuming this premiumization persists over the next 2-3 years, how would Hero look at sustaining market share? Can you give some color on new products ahead to get benefit of premiumization? Also, by when can we expect details of joint product development with Harley?
So Raghu, absolutely right. Premium is a big focus area, and we outlined the strategy even in Hero World last year. We reiterated there, and you've seen that the focus is on building a full portfolio of premium. So we went with our models in 200cc to create that again a positioning which would take us into a higher level. We've now gone with 160R, which is right in the belly of the market. And you will see more and more action. As we have said, we will cover the entire middleweight segment, which we have outlined earlier, in the next 3 to 5 years. And you will see action every year with some of the other premium model coming in. Our partnership with Harley, that again, in a sense, is icing on the cake, because that allows us to get into a segment which would generally be difficult unless you got that retro, that heritage brand image, and you know what I'm talking about. So that, again, product development has already started. We can't give you the timing as of now, but we are accelerating that plan so that we can get into that segment as well. So you will see a lot of action as far as premium is concerned moving forward.
And on the top of it, I think the kind of portfolio that we have and it's going to be in the near future, it's doing well in urban markets wherein you kind of associate the premium products. We've been gaining good grounds. Interestingly, with 160R, we've been able to expand the size of the pie in some of the rural markets as well. I think that's another story which is working fine and good for us.
All the best on this, sir. On Harley, if you can also mention some details on this distribution venture, how would be the business model be, or on the margin side, how does it work? Because now things have commenced.
Yeah, Raghu. So as far as Harley is concerned, you saw the announcement. We now have a separate division which has been put into place in double quick time. As you know that we probably around 3 months back, October 27, 28, we signed the deal, and the full team has been put into place with a full business division. We've already signed on more than 10 dealers, 11 dealers. We were signed on. Dispatches have commenced. So really we are full throttle into this. And what this business would do is apart from, as a distribution business, more importantly, the association of Hero with Harley augurs very well as far as the premium brand imagery is concerned. And I know that you and some of our other friends on the call had been asking me in the past but you can have products, but where will you get the imagery from? Of course, there are two ways. Organically, you build a brand, you can still build, or inorganically, you tie up and collaborate in some form or the other. So that way, the association augurs very well to lend that image to Hero as a premium association. And of course, with the product portfolio that I just talked about, the combination of these two gives us huge confidence on the premium portfolio moving forwards on the medium term.
Thank you, sir. All the best.
Thank you.
Thank you. The next question is from the line of Shyam Sundar Sriram from Sundaram Mutual Fund. Please go ahead.
Yeah, hi sir. Good morning. This is Shyam Sundar from Sundaram. Thank you very much for taking the question, sir. And very good operational performance. You also indicated the lead savings that are flowing through. Many congratulations on the execution, sir. So my question is related to the RM cost inflation. You have spoken about it. I just want a little bit more clarity on that, sir. So until now, on a blended basis, you have taken somewhere close to a 2 to 3% blended price increase. And does this price increase offset the RM inflation in Q4 as well? That is my first question, sir.
Shyam Sundar, as far as the cost inflation is concerned, let me again reiterate. So this is not something new that we are seeing. We've seen many quarters where the cost spikes up and then it comes down. And yes, industry is facing that again as far as the Q3 and Q4 is concerned. We've managed Q3 very well by accelerating the lead to savings. As I said, the saving program has sustainability of delivering those numbers over the next few quarters, and that gives us confidence. So I think a combination of the price increase that we have taken and the savings program that we have in the pipeline, we should be able to manage the margins and overall delivery. But yeah, we'll need to keep navigating this space because rather than looking at a month, 2 months, or a quarter, we need to look at more in terms of few quarters put together, and which is where we keep saying that our overall range for the medium term of margin is 14 to 16%, and that keeps us guiding. When we go below 14%, it tells us that we need to do something more, and we move towards closer to the 16%, and probably there is a potential for growth or fueling growth more. So I think that helps us, the tramline helps us in terms of navigating.
Thank you, sir. Thank you, sir. That's very helpful. So, my next question is on the demand outlook, sir. If you can provide some geography-wise outlook between north, west, south, and east. Because, the reason I'm asking is we do hear some disruption because of the farmer protests in the north, etc. So, how are you seeing the underlying demand in terms of the various geographies? If you can give some perspective, that will be very helpful, sir.
So let me just talk a bit, and then I'll ask Naveen to add. I think the underlying demand anyway, like you mentioned, underlying word, in our view, shouldn't be looked at from temporary agitations or disruptions, because then it's not underlying, it's a temporary shift or because of disruption that happens. And as I said, because of macro, micro, there's no logical reason to believe that the demand moving forward over the next few quarters should be any different than what we have witnessed, if at all positive. There, of course, will be a few weeks and a few months here and there when the occasion shift, the marriage date shift, or some agitation happens, that you could see some kind of things that come, bumps that come along your way. But inherently, what we look at the underlying demand, and we don't see an issue on the underlying demand on a medium term moving forward. But Naveen, you have added.
Sure, Niranjan, I think you said it right. The fundamentals remain the same. The macro factors, the rural factors, they're all working positively. Month on month, there may be few occasions in some of the market, like for example, if there was Pongal in South, you would see Tamil Nadu doing good, right? So and more you would see the migrant workers coming back. You will see those markets, in that month, in that period, in that quarter, would add to the demand. So at a fundamental level, things are well in place. These chapters of some festive in some of the market, markets opening up, schools opening up, and then we've seen that gradual state to state. So that's how it'll be. Dynamism is going to be the name of the game, and we've been agile enough.
Understood, sir. Understood. Thank you for that, sir. So one last question, if I may squeeze in. On the export market, while it is still a very small part of our overall volume per se, we are seeing a good ramp up on the export side. Where are we headed? Any aspirations that you can share specifically on the export side from a 2-year perspective? Do we want to be, say, at 10% of our volume? Where would we want to see ourselves heading to on the export side?
So Shyam Sundar, a good take on that. Our exports have done well this quarter. We've gained market share, albeit on a smaller number. We have to say certain things which are panning out very well now, and we've been talking about. If you remember, last time we talked about that. As far as global business is concerned, we had 2 phases. Phase 1 was about seeding into more and more markets as fast as you can, so that you can learn fast, fail fast, and therefore thereafter decide to build. Very clearly in the phase 2, and we had outlined this, we are putting the customized products, the products that the market needs after learning from that. Plus we have aggressively, we are focusing on some of the top few and key markets. So that's what we are doing on global business. Results we have started to see. Colombia, for instance, has seen a jump in the market share. Plus financially, Colombia has, after building for the cash burn over the last few quarters and few years, have actually moved into break-even now. If you look at now new entries, we have announced Mexico. Mexico is a big market, and the partner that we have tied up has got a big established base in Mexico, and therefore we do see that as a big potential volume driver for us moving forward. While the other core markets, the top 5-6 markets like Nigeria, we're talking about Bangladesh, we're talking about Sri Lanka, we are talking about Colombia, they will continue to be focus areas for us moving forward. And you will see a lot more action on this. So we are quite now confident about continuing to build on these numbers. And while I don't want to give a number out to you for what it will be in a year or 2 years' time, but we are confident that we will positively surprise you.
Understood. Thank you very much for that.
Thank you. The next question is from the line of Kumar Rakesh from BNP Paribas. Please go ahead.
Hi, good afternoon, and thank you for taking my question. My first question is around the other operating expense line for you. So one of your competitors talked about how aggressively they are using digital marketing, and using that they have been cutting down their marketing expenses. You talked about that you are also running Lean 2 program, which has helped you by around 100 basis points. Despite that, sequentially, if you see the other the operating expenses have increased higher than the revenue increase. So are there any incremental potential here that we also start adopting those digital marketing opportunities and further reduce this cost line item, or is our scale or the product mix is such that it may not be entirely possible?
So, Kumar Rakesh, on the other expenses, the numbers that I'm seeing is you got to look at, one is if you look at sequentially, right? The other expenses are around the same number as a percentage of revenue, which is 9.76%. And if you combine that with employee costs and all the others, they would have come down by a few basis points, maybe 10, 20 basis points. If you look at year-on-year basis, it's a significant down in terms of the percentage of revenue, which is of course on the part of the revenue leverage that we are getting with almost close to our 40% revenue growth. So we see that is a good feature because that's already contributing to margins. Of course, Q3 would always have, because of festive, higher A&P expenditure, which then starts getting normalized in Q4, and that's a tradition which is there in each of the quarters. But our focus broadly on the shape of the expenditure remains the same, with ensuring that we invest behind brands in the market while actually cutting down and optimizing all the other discretionary costs.
And just to add to that, Niranjan, I think since specifically digital marketing was the point that was raised, I mean, I don't look at as a cost-saving measure. I look at it as a very, very effective medium in these times. The consumer footprint, digital footprint are on the rise, even at the entry segment, and hence that's the right way to go. And we've been doing some good job in that space as well.
Got it. Thanks for that. That's very helpful. My second question was around inventory levels. On the last call, you had talked about that the target is to bring it down post-festival, around 4 weeks. So where we would be now compared to that target?
Yes, so we did come down to 4 weeks at the end of festive, like we had said. And thereafter, usually then you move to normalized levels. Because obviously with just 4 weeks of inventory, you cannot sustain such a distributed operation. But whatever our normal levels, which we had said always 4 to 6 weeks, just like margins on inventory, also we maintain the dealer inventory range on forecasted future 3-month sales, and we are in that range.
Got it. Thanks for that. I'll fall back in the queue.
Thank you.
Thank you. The next question is from the line of Kapil Singh from Nomura. Please go ahead.
Hi, sir. Could you talk about scooter segment as well? What are the kind of actions we are planning there? And if there is any update on electric scooters, we are hearing a lot of action on that, at least from a launch perspective. So, yeah, these areas I would like to hear about.
Okay. Hi, Kapil. Let me just request Naveen to address the scooter part, and then I'll come to the EV part.
So the scooters, you've kind of seen the market shares are in the positive space. We are in double-digit number. So the space available for us is immense, right? And there are some good product interventions which are being done, micro market level interventions which are being done. And we are confident that as we move forward with the kind of refreshes that are coming in, we should be doing good.
As far as EV is concerned, Kapil, as we have outlined, we continue to work on the programs, both obviously with the investment in Ather, and we have our in-house EV development, which has got accelerated. We've already given out certain timelines on that. When we talked about in the Hero world, we have talked about towards the end of 21. Could get shifted by maybe a quarter or two because of the pandemic. But yeah, we continue to be working aggressively within our R&D. And our tech center Germany, which we had established a few quarters back, is working only on two things, which is building premium portfolio and developing affordable EV product.
Okay. Sir, thank you. And can you also talk about the CapEx program that you have and the R&D expenditure for FY21-22? And should we build in any further investments into Ather now? As you said, product launches happened and initial period there could be losses.
So as far as CapEx is concerned, you've seen our trajectory. This year we had cut down on CapEx, and therefore once the fiscal year 22 comes, given the robust forecast on growth, as we said, by both RBI as well as by IMF, then we would revert to our normalized levels of CapEx that we had been spending before that. As far as Ather is concerned, obviously it will depend on the launch, on the cash burn. They are trying to move very fast towards EBITDA break-even as well. So we'll have to see how it moves forward, and very difficult to take a call right now or give a forecast right now on this. On R&D, we continue to spend, we had talked about over the last 5 years, we probably have spent twice that of our nearest competitor. So that will continue to be an area of focus in terms of spends.
Could you give numerical numbers on CapEx, like what are we targeting broadly in FY21-22?
As we said, it will go back to the previous ranges. I'll ask Umang to offline also, Kapil, connect with you, and probably he can provide a little more color on that.
Thanks.
Thank you. The next question is from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Yeah, hi, and thanks a lot for the opportunity and good set of numbers. My first question pertains to the retail market share trend as per Vahan, sir. I do understand the limitations of the database, but those limitations are there for everyone, all the manufacturers, right, in different degrees. But when you look at the sequential market share in 3Q, which captures the season for you, and even if I split it over to January, it should kind of capture most of the retail sales in the season. There has been a sharp deceleration in the market share for us. Because it's not like a small fall, we are talking about 500 basis kind of a contraction quarter-on-quarter in 3Q. And January is also kind of weaker. So could you comment on that? Because everything can't be because of delayed sales and Vahan not capturing it. We are looking at like-to-like data on the same Vahan database with the same limitations. So can you please explain that anomaly?
So Pramod, firstly, hi, and I hope you are happy with the results that we have delivered. And I was looking forward to at this time what question will come. So that's on a lighter note, Pramod. Look, my belief very strongly after tracking all this data is that honestly Vahan is not generating revenue or P&L for us. It is our sales which is generating revenue and the P&L on a consistent basis, and that's been a consistent delivery that has happened. We've talked about the lead and lag impact. Also, it impacts differently depending on whose sales are in which geographies. Like we are more on the north, we are more on the states which are probably large percentage of rural. You have large urban. So depending on the state-wise capture as well. So I think we should now basically, in my view, we should now look at the sales that we are having because, as I said, if you sell two-wheelers, somebody is going to ride on it. And therefore it doesn't get hidden in a warehouse. So honestly, we should just focus on what we are selling on a consistent basis, and we have shown on quarter and continuous basis. And I think there's no reason to now look at another data source for that. So that would be my long answer to your short question. Yeah.
Okay. And second is on the receivable side. So how can you explain, given the season what we had, there's always a build-up in September quarter, but how have the receivable trends kind of moved the end of December quarter?
Receivables, Pramod, has tracked very well. In fact, if you see our cash flow management, we have through working capital management, receivables management, we are now at a cash investable surplus, which is higher than the pre-COVID levels now. Yeah, even accounting for the profits that we have generated. So our working capital has moved again back to significant negative through receivables management. So they continue to track very well on the receivable side, and cash flow generation is something that I would say we as a company have done very well, which is also, by the way, getting reflected in the increase in the other income that you see in the P&L line.
Thanks, Niranjan, and best of luck, and I'll touch base with Umang offline for the CapEx and the associate loss split. Thank you.
Absolutely, Pramod. Thank you.
Thank you. We would request the participants to please limit your questions to one per participant, as we have several participants waiting in the queue. The next question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir, good afternoon, and thank you for the opportunity. Firstly, just again following up on the exports point that you had made, just trying to understand. I mean, we obviously a few years back as well, we've been trying to kind of increase our exports, and we did appoint certain distributors. Just wanted to check, what different are we doing this time on the export market? Are we like targeting different markets where probably the other say Indian OEMs are not present in, or is the product that we are going to be now distributing there going to be differently branded? What different are we doing there on the export side?
Mukesh, thanks for that question. We are doing multiple things differently. First, the learnings that has accumulated by entering into wider network of many markets, we are now putting all those into use. And as we said, let's take example of Nigeria, where the product requires more elongated seat because it's a commercial market and not a personal user market. So we have then designed the product differently to cater to that market. Colombia actually prefers more premium in terms of motorcycles, so that's where we actually put in our X-Pulse there. And it's not about how much X-Pulse gets sold, but once that is in the showroom, then that attracts more customers to come in, and therefore then they actually may end up buying other products of Hero, but that actually brings customers in. Sri Lanka, for instance, of course, it is right now getting impacted by their own import regulations. But there it's about they prefer much more stylish scooter compared to what gets sold in India. So all of these learnings we have put into our product part of it, and that's what is getting launched quarter by quarter, and you will see more actions there. The second thing is about, again, in terms of focus on some key markets. So we are saying that 70-75% of our resources, of our attention, of our focus will go towards the top 6-7 markets, while the rest of the markets will remain, but it's therefore more a prioritization in terms of refocusing on the key markets. And as far as new entry is concerned, we will go selective. We will not go across all the markets and try to add, but go after the big markets where the size of the prize is big. Like Mexico, you have seen, it's a big market, and it's tied up with a big distributor who's got a big base there, and that's a propeller. So I think these are the 3-4 things. The other thing I would say is also within leadership, within our company, there is a renewed focus on the global business, because not only this would offer us more in terms of the revenue, top line, bottom line kicker, but also from a portfolio point of view, it's important to have a shape which then is more, balances the risk profile rather than getting concentrated in one country.
Right. Thank you for that. Second question is on the domestic market. Last quarter you indicated that there was about an 8% difference between the growth rates of the rural and the urban markets. And also you indicated that the first time buyer was more on the rural side compared to the urban markets. Any change in trends there that you could highlight?
Sure. So, we've kind of shared that in terms of the growth rates which differ in rural and urban. In some of the months, some of the quarters, there may be, as we've said, that market is in state of change, with maybe marriages moving out of Q4 to Q1. We've got just one day in Q4 against 24 number of days that was last year. Everything shifting to Q1. And there is some change, but it's not, too off from the urban side. Yeah.
Thank you. We would request the current participant to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. Congrats on good set of numbers. A couple of questions on the bookkeeping side, the questions have been answered. One is, what was the other operating income in this quarter?
Your question is other operating revenues?
Right.
Yeah. So the other operating revenue for this quarter was 192 crores.
192 crores. Okay. And secondly, would you be able to quantify the commodity hit in this quarter, the gross impact which would have seen in this quarter?
I mean, if you look at the lead to savings, which I have said has accounted for more than 100 basis points, probably more towards 125, 150 range in this quarter, then you would say that, given the material costs have come down by 50, 60 basis points, one could argue that around maybe 100 basis points is factored into this quarter itself within the results.
Okay. And lastly, with respect to dividends, considering that dividend distribution tax is no longer borne by the company, do we expect the payout ratio to remain same and dividend per share to go up materially, or how do we see that?
So I wouldn't forecast the payout ratio. All I would say is that over the last 3-4 years, what we have endeavored to maintain is a consistent payout ratio. So we do distribute around, last 3-4 years, you've seen us paying out 60% of the profits, and our endeavor, subject to, of course, certain situations, circumstances can always lead to some bit of deviations, but otherwise, on a longer term basis, that's the policy that we have followed, and we expect to continue to follow that policy of payout ratio.
Okay, sir. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Ronak Sarda from Systematics. Please go ahead.
Yeah, hi team. Thanks for the opportunity and congrats on great set of numbers and achieving the 100 million production. It's a great milestone. Niranjan, my question is on market share. Now, if I look at even the Jan numbers, we have sustained nearly 250 bits market share increase. So now, going ahead from here, where do you see the opportunities and challenges in consolidating our share and building upon this?
Ronak, there are huge opportunities for Hero. You look at premium segment, our share is in single digits. We are, as we said, building portfolio, and if you look at fair share, while I wouldn't give out a number, but you can assume what it should be, there's a huge potential as far as premium is concerned, and we are absolutely focused, serious. As we said, Tech Center Germany is working on the product portfolio. We've started launching, so evidence is there in the market, and you will keep seeing action every year. So the big opportunity in premium segment. The second, of course, is scooter, where Naveen talked about. There are corrective actions which have been taken from a product perspective. Pleasure has done exceedingly well in a lot of markets, in markets other than its own stronghold markets. Destiny has done well, and these are the two brands on which we will ride on this journey on scooters. So there is again a big potential as far as scooter is concerned. Third, of course, is the global business that we outlined. Again, global business, our market share is around 5%. If you take all the players that export out of India, and the strategies are clearly lined up. And as I said, while I won't give out you a number, but we hope to positively surprise you on global business as you look forward in the next few quarters. So I think these are three big opportunities to clearly gain big market share, because over the past few years, we've really consolidated and held the fourth that we have, which is the commuter segment, which is the entry and deluxe. So I think it's a big opportunity for us in terms of the market shares on that. And of course, in the new category, which is EV, we are very serious and we are rapidly building the product.
Yeah, and add to that, the kind of work that we are doing in spare parts. So there is a huge opportunity in that space as well. And with the way things are shaping up, I'm sure that's going to be another good line of business for us.
Yeah, in fact, Naveen, I forgot about that. Next time, I think we should start talking about parts first.
Yeah.
Given the whole opportunity which lies, to capture that, and accessory and merchandise, and given the fundamentals that we have laid on the ground, and we didn't talk about this before because in Hero we always talk about once we see some fruits of the drivers on the ground rather than talking ahead. And now we clearly see the micro distribution, just like FMCG, what we have rolled out, is started giving now big results on the parts, and then you see the growth. And therefore, we're very confident of surge in our parts, accessories, and merchandise business moving forward for the next few years.
Absolutely.
Thank you. We take the last question from Amyn Pirani from CLSA. Please go ahead.
Yes, hi. Thanks for the opportunity. Most of the questions have been answered, but I just want to ask a larger question. That if I look on a YTD basis, can you help us understand which sub-segments of demand are yet to pick up? So for example, in terms of either end use or in terms of rural, urban, or regions, you talked about the student demand, which is a very specific category of demand. So are there any specific categories of demand, regional or use cases, which are yet to recover post-COVID? And what's the outlook, in the next coming months for those channels?
Yeah, let Naveen answer. There are many, but Naveen.
Yeah, so there are many, and start with, as we said, the education sector. You can count on the huge amount of exodus of migrant workers which moved out from urban centers, and hence that's another area which is still going to come back. One major area which I see still holding on is the replacement buyer. Contribution of the replacement buyer YTD level has been pretty low. We've been working on getting that demand, and it's bearing fruits. I think that's one space that I see huge opportunity apart from those need-based and segment-based spaces, basically.
Okay, and if I may just add on to that, even when you look at the focus of the budget on the capex investment. So it's not just about the segments as well, it's about the increasing employment, increasing incomes. And then as NBFCs and the financial sector is coming back into this space, the increase of finance penetration then offers opportunity not only for the current demand growth, but actually bringing forward the demand from the future years. So that is a big opportunity that can get panned out, because still there's a huge potential to move up from a finance penetration of 50% to maybe 70-75%. I've been getting lots of requests on the capex numbers, and Umang has said that why don't we talk about it? That's fine. So we have said that we will go back to the capex ranges which were there earlier, because in the COVID period we had cut those down for FY21. So FY22, the capex probably would be more in the range of 800 to 1,000 crores. That's what we expect the range to be. We'll keep calibrating it as we move forward, depending on how the progress happens on the overall demand and the supply side.
Thank you.
Thank you, Aisha. That was the last question. Thanking everyone. Amit, Auntie, thank you so much for hosting the call. Glad to have spoken to all of you. Look forward to connecting after the call now.
Thank you, everyone.